Welcome back. Now, South Africa's automotive and mobility sector is undergoing a profound transformation, with sustainability emerging as one key driver. Navigating a shifting global trade environment with developments threatening export competitiveness and highlighting the sector's vulnerability to market concentration. Luthando Vuba, Executive Head of International Trade at Business and Commercial Banking for Standard Bank, joins us now to shed light on opportunities and challenges for South African manufacturers and suppliers in a changing environment. Thank you so much for your time, Luthando. Now, usually when we see new vehicle sales ticking up, which is what we have seen over the past few months, that signals that consumers are in an improving financial position. But my question is, does the fact that the majority of these sales are on cheaper imports actually distort how we are viewing the consumer's pocket?
Thank you, Zinat. Thank you for having me. Thank you for the question. I think when we look at vehicle sales, we need to keep in mind what really drives that is the consumer. And a lot's been said about how many of the vehicles coming from the east ending up in our roads. Even as you alluded, cheaper imports. I think the price point is one, again, driven by the consumer. I think another trend to that's very important and directly links to the trend that we are seeing is what consumers are actually looking for. Mm-hmm. And the sales in SUVs, in particular mid SUVs, should tell that story. So I think when it comes to consumer preference, what they want the vehicle to be capable and the price point for that to come at is really what we are seeing play out. The fact that you have whether it's Chinese, Indian brands that are playing into that space, and where they have the upper hand of the cost of production, therefore the price that they can sell at, I think it feeds into that other aspect that I mentioned on what the consumer has sort of been showing us. So I think that is very important to balance how we look at the trend. And it's been a trend that's been coming on for a couple of years. Also, the state of our roads in the country do push people to want, a bit more versatile vehicles that can handle our terrains. So I think that's a key one. And if you actually pay attention to whether you're talking Mahindra or, the other Chinese brands from the Chery Group, they're all playing in this mid SUV space. So I think that's a very important insight. Yeah. The other one is the advent and growth of the new energy vehicles. So whether it is a plug-in hybrid, or it is a hybrid vehicle, or it is a fully electric vehicle, I think is an important factor to consider. Whether you consider yourself, being green conscious, so you want to, mitigate climate change by lowering your emissions, or it is purely looking at just the cost of owning and the cost of the running cost rather of owning a vehicle. Certainly not having to pay for fuel, which we have seen the lows and highs of it when it comes to our shifting fuel prices over the last 4 to 5 years, is certainly one that also is another consumer insight that is driving that. And interestingly on that front, it's actually the hybrids that are growing aggressively in demand and in terms of also the sales. So that vehicle sales number that you're referring to, if you dig a bit deeper, certainly you'll see in that the hybrid and mid SUV space is really what's dominant.
Yeah, thank you actually very much for laying that out for us. A very fascinating insights there. And for a lot of us, I mean, the question of cheaper Chinese imports was the impact on other brands of new vehicles. But we had a trading update from We Buy Cars yesterday that showed a slowdown in growth of profits, and of course that is a second-hand vehicle platform. But now there's a question about the impact of these cheaper new vehicles on the second-hand market. Could we be faced with a structural change here?
Certainly. I think going back to my earlier point around just the point around price being something that I think consumers become sensitive about, whether you looking at the adjusting, to both the economy, inflation, and therefore, spending power in the market following COVID and that disruption, or it is just, the preferred trend on just how the consumer is thinking about what a car should cost them when it comes to their household budget. That I think cannot be ignored. And what we saw is an advent and an aggressive growth of the secondary vehicle market following COVID, and the likes of We Buy Cars, would sort of give you some really exciting figures to speak to that between 21 and 23. But I think, again, on this price point, so if you're getting a newer vehicle that has the latest technology, compared to a used car, which is from a good brand, European or US brand, I think that's what you're competing with. And certainly, it's just how we behave with our cell phones. It's about, which one is kitted with the latest tech and the capabilities that it has. And I think for the longest time, we have seen this, with the more traditional brands to the South African market over the years where, depending on you're buying an entry vehicle or like midway, certain features in the car depended on the model that you were buying. And now I think with some of the entrants, you're having those features in the most basic or entry-level car. So I think all of these things play into why the consumer is preferring, the newer vehicles, but that are more affordable. Compared to the used car market, which I think has been immensely profitable over the last couple of years. I think that's a competing arena, and certainly the more traditional brands of the South African market in the new vehicle space would struggle. But I think they would even struggle imports coming from China, just because there had been a shift in the market towards used vehicles.
And as you're talking about shifts. As you're talking about these shifts then, Luthando, I'm wondering then, where does this leave the existing car manufacturers in SA? I mean, you talk about climate change as well, because there's also the electric vehicle pressure with these hybrid vehicles also coming in. Those companies are also facing challenges in the export markets. There's the tariff pressure as well, and now we're seeing labor friction. So where does that leave them? Because I also know that they have been doing some restructurings, but could there be a point where that's not enough, where they actually exit?
Yeah, so I think if we just go back to the prediction around the outlook for Africa's automotive sector, right? We're talking about moving from 21 billion US dollars in 2024, and the estimate is around 33.1 billion by 2033. And for context, for the South African market, it will account for around 28% in 2024 of that. So what that means is South African automotive sector still holds a leading position when it comes to the continent for the sector. When you look at the projection and what it is estimating, there are some green shoots happening in the likes of your North Africa. So there's a lot of progress that Morocco has made, Egypt as well, shifting into that space. And we speak to some of the Chinese autos, they actually have set up plants, assembly plants in the likes of in Egypt. So what is then the reasoning that an entrant to the continent would look at this, the continent where most of, I'd say, the population and certainly the economic growth is sub-Saharan, and they choose to set up, in North Africa. And I think it comes down to the ease of doing business, the incentives for the foreign direct investment to enter this market. So I think that's an interesting one just for us to assess. And I think that's where the opportunity is for the sector in South Africa. So how do we think ourselves as a regional player? Morocco may be manufacturing for Renault, but they still requiring to import some parts. And one of the key strengths of our market and our sector has been exactly that, both the skills and the components manufacturing. And I think that's where the opportunity is going to be, to ensure that 33 billion US dollar, we are still holding that market share, is going to be about being laser focused exactly where we want to play in these other hubs in the region that are investing or enabling investment into the auto manufacturing or assembly.
Yeah, and that's actually another topic in itself, in terms of how government is creating a policy environment that is enabling for that investment. But Luthando, we do have to end the conversation there, but thank you so much for your insights. That was Luthando Vuba, Executive Head of International Trade at Business and Commercial Banking for Standard Bank.